Hi guys, it's Cryptobirb here, and welcome to today's Friday webinar. Bitcoin crashed tiny bit on an intraday basis because of China FUD. China strikes back again for the 199th time, pretty much like in the past couple of months, if you will. And the question is like, how will Bitcoin actually just bear all of this madness, all of this recent FUD, and why I do believe that the past days have been probably the last buying opportunity well, in order to load up for the final leg up of this bull market. And we're going to exactly discuss how this bull market will end, why it will end, and when. These are the most important questions that we're going to ask today. And if you are ready to stay and hear all my thoughts, they're coming right in a moment. Stay tuned. Okay, beautiful. Let me know, guys, how you guys are doing at this very moment. I can see some people joining in the chat. There is about 230 people from what I'm seeing, if I'm not mistaken. There is a new option apparently from Twitter. Okay, and like there's a new integration from Twitter with the StreamYard, which is the platform that I'm using to broadcast. And this is kind of like a tiny bit change because they've been using the Periscope, which is different. So perhaps this corresponds somehow with the views. But I just want to let you know, guys, that we are right now going to discuss something that most of you probably will not believe until they see that. Okay, and for a fact, I've already got used to hearing that immediate that I'm pretty much just dumb for longing to FUD or for selling into extreme greed. Okay, and honestly, guys, speaking, I've been through the bull markets, through the bear markets. I've been through the ups and downs, through extreme FUDs, extreme FOMOs, through the biggest institutions buying Bitcoin, through the biggest institutions dumping Bitcoin. Every single thing, this has to do with the extreme emotions from the people and the actual institutional suppression in order to get you out of your positions. Okay, so we are going to discover and exactly cover like why why the China FUD is just an attempt to suppress the liquidity and to actually shake out the market, out of all those cheap beads, that they are going to be used in order to load up for the final leg up. Okay, so if you're ready, we are going to. I've not really got my iPhone just yet. I just got the AirPods, however you call that. I'm just trying it out. Um, yeah, sadly, it's coming in 2 weeks or something. Let's get it going, guys. And I definitely want to let you know that this is probably going to be one of the most important webinars I had ever held. Okay, and the reason is that we are going to briefly discuss and lay out all of the potential things and phenomena that you're going to guys notice and witness within the next months. And as always, people will call me idiot for selling, people will call me idiot for buying, and people will call me idiot just because they envy most usually. But this doesn't change the fact that the crowds are always wrong at the extremes, and we are going to exactly cover why. Okay, so if you guys are ready, let's actually go and straight jump in to the screen sharing so that I can actually just show you a couple of updates about Bitcoin. And to start with, I hope you guys can see the screen. But well, we have seen today, we have seen so far this black ugly candle showing off some tiny bit of demand over here just at the bottom of where the lower candle shadows are. This tells me that on an intraday basis, these lows were kind of like bought back, which tells me that the market considered this pretty much to be cheap rather than expensive. And well, this China FUD, this entire China FUD thing is is not really like people selling off. Okay, there are so many webinars that I actually covered already, like in the past, explaining how the bots manipulations look like, how the bots react to the media news, and they sell off immediately. Okay, with the speed, with the effectiveness, that is like pretty much like you cannot match as a person, you cannot match as a human with a computer which reacts immediately and emotionlessly. Okay, So if you actually just go and start, from the high time frame point of view, as you should always do, okay, there is this actual um, triangle chart. Let me actually just perhaps check if I have it somewhere over here. Okay, let's see if it's this one or not. Not this one. Okay, I'll find it in a second. But what is the most relevant thing out of all this? Okay, is that the long-term time frame, the long-term perspective is of course not bothered a tiniest bit by this, well, China FUD, mainly because the week has not closed just yet. Well, China FUD was here. China FUD was here as well, if you remember. China FUD was as well on the Bitcoin bottoms, like where they were saying, Bitcoin was pretty much like worthless and it was going to die. So China FUD is something that has apparently become, to be a tool for intraday tiny market corrections. Let's say if you have enough power, and this is actually confirmed, and we are going to give you, and I'm going to give you the actual use, like real cases, real case studies for how the market manipulations look like. Okay, it is out of question that this China FUD, happens most likely and most usually around the Bitcoin bottoms. And this is supposed to suppress the liquidity. This is supposed to shake you out, to force cascade liquidations in order to get back for the price to the lower levels where actually most likely the institutions are loading. Okay, so China as one of the, like, if not the largest holder of Bitcoin in general, okay, um, of course, try to somehow control that to some extent, and just the way that JP Morgan, was actually accused like 100 times of market manipulating the gold price. Okay, the same way China apparently is able to use these kind of like bot reactive news events, okay, that they release out there, okay, and well, at the same time cause micro movements. Like micro for Bitcoin means like 5% as well. Okay, those are not small movements. But my overall scenario was that the market would move. Okay, and if you remember, I was actually giving you this scenario somewhere over here in July, that the market would move, as a matter of fact, okay, in a form of a contracting consolidation, okay, which is some form of in this case, something that I would call a coil or symmetrical triangle, okay. And the reason is, again, that quarter three is usually lazy. It's about people coming off the vacations, is usually about the low volatility, low market interest on the volume basis, like people not really very getting too much interest about trading at all. Okay, and that's what happens. That's what makes Bitcoin usually, out of lower interest, just narrow down a cat out volatility. Okay, so you see the decreasing volatility most often. So far, we marked the high at the all-time highs. We marked the highs of 53, which is the lower high. We marked the lows at the low 30s, or if you will, 28.8, which is the exit floor. And there, right now, we are, for the second time, actually for the third time, for the ever since the COVID crash, it's the third time. This was like, here was the first one that we launched off pretty much and just skyrocketed ever since, off the 50-week moving average. Okay, this was the next one, the June's session of the extreme fear that lasted for more than 80 days. Was pretty much just like yet another case of the mean reversion, okay, where the market has got completely reset back to its third price, because the volume, per the volume weighted average prices, which we are going to cover in a moment, or the overall mean prices, those are what we use as an arbitrary kind of like level to call a certain price of Bitcoin fair. Okay, the market fairly values Bitcoin at this moment based on 50-week average, 50-week average price of Bitcoin, okay, is at this very moment somewhere approximately 38.5. Okay, so there is still tiny chance that for a moment we tap this. Okay, there is tiny chance we tap this. The reason that it works as a support, that the moving averages work as supports, especially the longer time frames, the longer period ones, is kind of like dual. It's firstly because of the nature of statistics in the market cyclicality, where the markets tend to deviate around the averages, okay, and at the same time create those averages, those moving averages. And like when the market comes back to its fair price, to its normal price, after a series of increasing, episodes, periods, candles, waves, whatever you name that, then heavy deviation against the mean is the reason for why you should, okay, at least have your caution turned on. Okay, you have your eyes kept on and open, because the more heavily the market is deviated, the bigger the chances for the reversal. Same, it works in the upper side and, well, on the bottom side. Okay, the biggest deviations are always about the reversals. And with all that said, okay, if we assume this triangle concept, somehow there to be held, then we would have the fourth wave, like the first wave of Elliott, the second wave of Elliott overextended with the COVID crash, black swan even unpredicted by any charts. And the third wave, which is usually the most extended one, the fourth wave, the corrective wave, which, like, depending on what's going to happen, like in the next months, either has already closed and we are already in the fifth wave, or is just getting closed yet. I mean, it's not closed just yet, but it's getting closed. Okay, but as a matter of fact, it's irrelevant. But it's completely irrelevant whether or not this fourth wave has already closed, finished, or not, because what we know for a fact is that we are still missing the final leg up. We are still missing the final wave, the final shot in the stratosphere. Okay, the final blow off top. And like, I would not really, kind of like just deal right now to explain why the blow off tops are typical for Bitcoin. I had literally hosted about 20 webinars so far about that, okay, in the past. So if you guys are new to this channel, by the way, make sure you hit the subscribe button, smash the likes as well, okay, and leave some kind comments and questions, because right at the end of this show there is going to be a giveaway, and before the giveaway, I'm going to cover a couple of questions from you, okay? So most importantly, this works as the support. The 50-week moving average works as a support dually, as I said, because of the statistical nature of market coming back from the highly deviated areas back to its fair price, back to its average price. And we know that the market prices oscillate around the averages in both directions, okay? And at the same time, it is the self-fulfilling prophecy, because people see that there is a support. People see that there is a line, being approached by the Bitcoin's price. They expect this line to work as a support, like even visually at times. But hey, like, if it works, then it works, and good for you guys, right? We can, like, it's not about the technical analysis being the self-fulfilling prophecy, and because of that it doesn't work. Actually, it is a self-fulfilling prophecy, and because of that it does work, okay? So this is the funniest thing. And on top of that, by the way, technical, this is a never-ending discussion, between the economists and the actual financial people, whether or not technical analysis at all works or not. But happily for us, for the market technicians, it was already delivered in the proof, in the research, from the academic people, from the professors, in the dealing with the financial districts, departments, industries, that the technical analysis can be successfully applied in order to generate excessive returns over some longer period of time. So it can be used successfully, and to help you beat the market, to help you perform better than the average, because that is the overall goal of applying the technical analysis. You want to be better than the average, okay? You want to be better than buy and hold, which means doing nothing, pretty much, okay? So knowing that this can work as a support, I would consider that, probably like the first, the second, the third, and the final buying opportunity right now of this bull market, most likely. Okay, and because we are missing the fifth wave, knowing that this is usually the most steep, like the steepest, the most vertical one. By the way, I hope you guys can see the screens and everything. Let me know, please. Okay. Okay, very good. Knowing that the fifth wave is the most vertical one, okay, like if I was guys to tell you where we are on the map, hopefully that that it like launches somehow, that if we open up the let's say the BLX, the Bitcoin Liquidity Index chart, okay, which shows the entire Bitcoin's history. By the way, we have just crossed bullish. We have just crossed bullish on a monthly. This is like insanely powerful, signal. Okay, that happens very rarely. But if I were, guys, to narrow down to, if I were to narrow down to where we are, in my opinion, if I were to compare, like the location, then I'd say we are here. Okay, that this entire thing corresponds directly, I mean indirectly, of course. This is not like 100% repetition, the copy paste candles, okay, and everything. This is just the similar market stage and phase that I'm observing right now. Okay, people still fear. There is no way the Bitcoin peak does not happen within the extreme greed environment. Bitcoin peaks always when everybody gets rich, when everybody just dreams of Lambo and actually just is on the phone right now calling for to book their Lambos, not even having collected the profits just yet. This is the phase when every taxi driver, every construction worker, every I don't know, shoemaker, whoever, like, I respect all of these jobs and professions. I believe every job and profession is extremely useful. But people who do not deal, with trading on a daily basis, if they engage, okay, they engage because they have heard that in media. And as you probably imagine, once you hear some stuff from media, then it's already late, because there had to be some insider, some informer, some information asymmetry, somebody having the information, okay, telling and instructing the media how to put it out to the people. So it's an insider trading to an extent. Like, there are so many people in the governments, uh, in the Fed and everywhere, central bankers, who actually just are insider traders, right? And they trade based on unavailable information that they can only hold. And they should be put in jail, of course, for that. Okay, because it's not just. So having this final leg up right ahead, okay, this just tells you, of course, that again, we are not early. We are actually late. Like, guys, you are late. Like, if you join now and if they claim you're kind of like early, then I'm sorry to disappoint you guys, but you're joining 3 years too late. Okay, and you're not going to tell me you're joining early. Perhaps for the longer periods, yes, but for this bull market, which usually lasts 3 years, well, your time has gone already, right? Where have you been for the past 3 years when the Bitcoin was rallying from $3,000 up to 65? Okay, so with all that, again, just stay rational about, like, do not fall for some fake gurus telling you, okay, we're still early, like, for now, and just sell everything on the and then leave your literally take out as many loans as possible. Like, if you hear people telling you that, you're likely going to hear that most likely around the market tops, okay, where everybody is pretty much just extremely bullish. But back to the Bitcoin's analysis. Okay, back to the Bitcoin's analysis. This kind of like support coming from 50-week moving average, it kindly corresponds somehow with the idea of contracting consolidation, and Bitcoin has reverted back to its fair price one more time. Okay, and from the higher time frame point of view, it does not matter. It's completely irrelevant if it goes to $38,000 or 37.5 or 37.476, whatever the fuck numbers you come up with. It's completely irrelevant from the longer term point of view, because it's completely not what causes the markets to move. Okay, what causes the market to move is the fundamentals, and the Bitcoin fundamentals set it for its deflationary model. Okay, where it is called the digital gold, because just like gold, it has very limited. It is very scarce. There is not much gold on the planet. Okay, and the more you dig for this gold, the more you kind of like have already this uncovered these gold places and gold mines and everything, then the lesser gold actually remains, and the more demand per a gold unit it gets. Here's the price increase. So same way that gold is supposed to grow for a longer period of time, Bitcoin is supposed to grow for a longer period of time because of it's how it's arranged. The halving processes, which happen once every couple of years, last time was in last May, okay, which was actually, by the way, in here. Then every single halving has brought all-time highs so far. Okay, because it reduces the availability, it increases the scarcity from the fundamental point of view, and this is what drives Bitcoin to go up for long term. And what we guys are talking about, if we apply the technical analysis, we are not talking about the like economic factors, the monetary factors, and the overall like protocol concept, right? We are talking about the market insiders and how traders interact with one another. Okay, how they refer, what is the reference basis, okay, how they make up decisions and interact between each other, like in order to set up the transaction, okay, on the bid and the ask side. This is what we analyze and as the technical analysts. And even if we go down to lower time frames, because the high time frame point of view, okay, then you have a couple of this is the same 50-week moving average, by the way. Okay, these are a couple of lines, that are volume weighted average prices, but they are anchored. They give you volume weighted average price, which means that it discounts the volume. It cares and pays respect to the volume. Okay, shows you the average price of volume with the average price of Bitcoin with respect to its volume. Okay, I hope you can see that still. But like I would not be bothered too much, about the fact that you have like not really got the perfect resistance or perfect support in here held, because we are still in the big major range. We are still in the part of this big major triangle, okay? And every triangle is defined by its market extremes, by the extreme high and the extreme low. And whatever happens inside, it may go up, down, and even fucking backwards, and it's not going to be relevant because the trend is not bound to continue until it makes a new high, okay? Or it's not continuing lower because until it makes a new low. Okay, I hope it makes sense. So not caring too much about what happens inside the range, it's way better usually to play it outside the range. But if you anchor, if you take it off, if you guys want to go for the volume weighted average prices, you can actually just find it in here. Okay, here you open up this one. Okay. Go to the very bottom, okay, which is here, anchored view up, and you anchor that at the levels which interest you. And the levels that interest you the most should be, of course, always the market reversals. The bigger the market reversal, the more relevant and the more important it is. So if you anchor the volume weighted average price at the extreme high, at the peak of the all-time high so far, it tells you what the price of Bitcoin on average, the fair price of Bitcoin is ever since the all-time high. So it tells you and discounts all this information ever since the all-time high. And similarly, if you apply it from the lows, let's say of the final leg up, okay, of this recent, like causing this eventual breakout out of this 80-day long, extreme fear. Okay, I would consider this one, of course, the more recent data, the more important it gets for the technical analyst. And this anchored view up tells you that the average price of Bitcoin, okay, the fair price of Bitcoin is 33.825. The lower one is 42.235. Okay, so we know that Bitcoin is currently trading locally between its 50-week moving average and below its actual volume-based averages. So if Bitcoin trades below its average fair value, then doesn't it sound logical? Then it is considered undervalued. Anytime the Bitcoin is trading below its fair price, it's undervalued. And anytime it trades above, it's overvalued. And the higher it goes, the more deviated it gets, the more extreme deviated it gets, okay, the stronger the signal is for the reversal. I hope it makes sense, everybody. And so that's why, from the higher time frame point of view, it's completely irrelevant. But if you guys know and assume, again, that, of course, no unpredicted event just happens, that like another pandemic, another like Martians fucking attack us, just ride on the planet, or or I don't know, like there's some military conflicts, like escalation, or World War III just bursts out, or like nuclear weapons are dropped. Because if that happens, then I promise you that Bitcoin is not going to do well. Like, you have my word on that. There's no force on this planet that could actually just stop Bitcoin from dropping. Either there's nuclear power just dropped off somewhere on the planet, we all die, right? There's nobody going to be to trade it anymore. So unless something like this, unless something crazily exotic happens that you cannot really read from the charts, okay, you're not going to tell me that you can apply technical analysis and find out that Martians are going to fucking rally on us in 20, 30 years, okay? I don't even know, like just some crazy ideas. But technical analysis is a very limited tool, okay? Then knowing that we are still missing this final leg up, okay? And then knowing that you get, like from the local highs, Bitcoin at the discount of 25, 21, 22%, which is usually the medium time frame, typical medium time frame retracement size, then in my opinion, the dips are for buying. You get Bitcoin trading below its fair prices. You get Bitcoin actually fulfilling its regular kind of like 20, 30% retracement. That is quite typical for like for Bitcoin's medium time frame seasonality. Okay, these are like regular corrections for Bitcoin. Then, well, in my opinion, this is good buying opportunity. Anything around below the volume-weighted average prices and around these like 50-week moving average, this sets it well logically as a good buying opportunity, right? And what happens on a micro time frame, okay? Because as I said, these dumps on the market, like these China bonds that you guys saw in here, like this is bots. This is not people reacting. I guarantee to you that there are still people who are not aware of the China FUD because they have not just got back from work to home just yet. They haven't played their TV just yet. They haven't opened their Twitter account just yet. So there are still people who do not hold this information. Okay, so it's not people who react. It takes time for the people to react to the news, to the information, to discount it, because you may forget a password to log into your account. You may set your bids somehow wrongly and you get liquidated. Like, there are so many ways why you are inefficient as a trader and why you cannot beat bots and programs which track 24/7 with extreme computational power and are backed by neural networks and artificial intelligence solely with the purpose of catching the FUD and catching the news and analyzing the sentiment, whether it's bullish or bearish, whether it's Elon Musk joking about Bitcoin, whether it's perhaps there is like before logging onto this webinar, just so that that Elon Musk probably is going to take the divorce or something like that, right? He's going to divorce his girl. So perhaps there are algorithms who actually would track and like assume that anytime right now Elon Musk just tweets about Bitcoin is going to be more bearish than bullish, right? And perhaps additional bot reaction. But these sell-offs, immediate sell-offs, okay, they do not happen because of people selling off. This was like a constant selling off, 1 minute candles, okay? And what happens after these sell-offs? Guys, this is quite simple because we've had it so many times on the major time frame, okay, on the major time frames, on the local time frames. What happens after the crashes? The crash causes PTSD, okay, post-traumatic stress disorder. That's what I call that. People are in the denial that they cannot believe they got liquidated. So the market is no rational quote. The market is never fully rational, okay. But people choose to stay either on the sidelines, hence little interest in trading the range, or they just simply lack the rational because they have no clue. They are in denial. They have no idea what happened, and they just simply wait. Okay, so the PTSD is usually about lack of application for the classical technical analysis patterns and everything. So same way, guys, that you saw a PTSD after the 53 down to 43 crash, okay? This was a PTSD, okay? The market started off with some spike defining the low extreme and the high extreme locally as well. then it was pretty much just going back and forth in a range with no trend, with no clear direction, with no clear chart pattern. Okay, so this is repetition. I mean, we could expect the repetition on the local time frame of what happened in here and what happened on the mice crash. Okay, so again, phase one is complete irrationality. Market just swings back on a high volatility, which is like destroying all the both sides of the range because of over leveraged traders trying to catch the tops and bottoms, which is impossible. Okay, then the market slowly starts discounting the fact that it is still undervalued and it's starting to finally search for some direction. Okay, but as long as it stays within the extreme, okay, within the extreme high and extreme low, then it's not really trending. Okay, it's not trending until it breaks up, and until it's not, and as long as it's not trading, anything can happen. You can expect the supports to get broken, you can expect resistances to get broken and then broken back again to below, like to close below the line, the breaches for the support and coming back above, right? Just like you would see in here, there was a fake out on the bottom and rally right after. So safest for everybody would be to wait until it unfolds. Okay, to play the breakout retest or the breakdown retest if at all, but I still would not really dare to short it because of the larger context. That's why, guys, you have to always start from the larger context perspective, because when you focus too much on what's happening locally, then you would say, okay, I better short it because it looks bad. And then when you actually just zoom out, you understand after some time that you're shorting right into big major long-term ultimate support. Okay, and then after you're already kind of like just you're left behind by the market, then you ask yourself a question like, how is that possible? How could I be this dumb to actually sell the support? And this happens again and again and again and again and again, because that's how our human psychology works. Okay, so I just want to, guys, show you how the market manipulation looks like. Okay. So this is Reuters, okay, the rating agency. JP Morgan, this is a tweet from yesterday. JP Morgan Chase and Co., whatever, agreed to pay 16 million, not even full, to settle class action, blah, 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 which investigations into illegal trading in futures and precious metals markets, known as spoofing. Okay, so the biggest banks and institutions were fined. Like 60 million is not even fucking scratched to multi-billion bank. Okay, like this is just some insider going joke that they have to pay. It's like you literally, I don't know, you wreck a car and all you have to pay for is pretty much just, perhaps a car antenna on top to play the radio or something. It's not even like serious, right? Because they are friends and then go hand in hand, of course, with the scammers and overall market manipulators from the central bankers. But the JP Morgan, okay, has been proved to cause market manipulations and was fined so many times already for causing the market manipulations on gold. Okay, China thoughts, as I said, are apparently part of market manipulations as well, but because it's decentralized, you cannot always tell who that is, right? But here's a very interesting recording. I think, I hope I'm going to find it somehow. I'll need to scroll through maybe. Oh yeah, there we go. Right? Let me just show you. I hope it's playing. Okay. So I don't know to what extent this is real or not. It looks real. I mean, but it's irrelevant, because, guys, what you are fighting for and fighting against, like, it doesn't matter that there was no idea. Don't worry. It was just people shouting. You guys are trading against the bots and against massive institutions who hire hundreds and thousands of people, okay, to actually follow certain policies. And they know perfectly way better about the market insights, about the trading, about where you put your stops, about the market technical analysis, the fundamentals. They know, because they are professionals in a space and they take only and hire the best financial people of this space on the planet. They perfectly know how you're going to behave. Okay, they can read you. They can read you like a piece of paper, like an open book. And what happens is that people at JP Morgan just have these traders who execute the transactions, okay, who execute and market cause the market, to actually dump at certain points again, right? So because there are, of course, the technical analysis applies on the short-term period of time. Certain people, set their stop losses, let's say, right below the moving average. So it is kind of like obvious, isn't it, that if you actually just dump right below it's the main support, there's like bigger slice, there's like bigger liquidation spike already, okay, coming from the cascade liquidations, because they know that you're holding the stop loss right beneath the support, right beneath the moving average. They fucking know that because they can read books, and you read the same books, so they know better than you what you're going to do, right? So it is confirmed. It is not a fugazi. It is not like some fucking conspiracy theory. People and institutions, okay, perfectly know how to engineer the liquidity, okay, to shake you out of this market. And that's why you never actually succeed. Like 95 or 99% of traders, intraday traders who apply like 100x leverage continuously, they just never make it, because it's impossible to be lucky 150 times in a row, one after another. Okay, it's impossible to have this much luck. So knowing that the market manipulation is a real thing, it is not just a joke. Okay, we have to understand that it works in both ways. Okay, it does not only work for buying, but it also works, for buying into your sells, but it also works the other way. The markets are going to be like utilized to dump on you when you're buying, and to sell on you and to buy on you when you're selling. Okay, they would reverse what you actually intend to do with that, because the institutions and the whales, okay, like they only care about the liquidity. Let's say you have billions and billions of dollars, and you want to buy something very fast, cheap, okay, and buy a lot of it. So it's kind of like impossible to have this result, this desired result, without causing a 20-50% market move in the upside direction. It's like you try to buy illiquid shitcoin with $1,000. You can go and see what happens. Okay, you consume all the sell orders, all the way up until it actually reaches, if you market buy that, okay, and then causes like a shooting candle, like literally 50% blow up candle or something, okay, and then it dumps back again, okay, because there's nothing left to to cover your buys, perhaps. So this is exactly what would happen if some huge institutions were loading Bitcoin without the market manipulations. They have to make you sell, okay, right into the bits, because otherwise they would accumulate that for years, and they do not have years for that. They have to have this urgently, because Bitcoin, they are already late, and there are so many reasons why institutions are always late, which I'm going to tell you exactly in a moment, guys. Okay. Speaking of it, okay, this is part of my report, of my Bitcoin report that I actually post on my website, thebirbness.com. It is in the blog section, okay, in here, and I post a couple of times a week, very very exhausting and extensive market updates. Okay, those are free to read for everybody. You can read it at any time, access it, see all the proof records, all the past social proof of records of my reports, and whether I was wrong or not, I don't care, to be honest, but it's all there, and you're still going to discover that I was pretty much right all the time, like against counter trading the crowds. But what is relevant to answer the question, how the institutions work. Okay, so let me actually read it to you guys. That's what I wrote. I promise you one thing here for sure: institutions, firms, hedge funds, Walmarts. Okay, and these firms consist of and are run by people who have exactly the same struggles, questions as most of the traders. By the way, I hope you can still see that. As most of the traders re-get it. As most of the traders, should we buy or should we buy now or should we wait? So I explain here like that. Here's how it works. Well, if you're a firm, then you care about your company's revenue. Okay, to boost your revenue, you unlock new payment methods. So, which is exactly why Apple, why Twitter, why Microsoft, Google, Alibaba, eBay, Allegro, all of these giants, all of these institutions, all of these merchants, these big tech companies are going to accept Bitcoin payments, most likely within this year or just the spectrum of the next couple of months. I promise you that. Okay, it's just a matter of time until you start finding out, and of course you would start hearing about that when Bitcoin just breaches for the new all-time highs, because they have to additionally empower, because of the market manipulative powers that they want to have. They want to additionally empower and leverage the prices up, okay, by additional boost from the bots reacting to the positive news. Okay, so there was recently a failed announcement which was fake from Litecoin partnership with Walmart, and what happened, there was immediate reaction for 30% upward candle, okay, and which after a couple of minutes was deleted from the Twitter, and the candles were dropping back to the same levels from before the pump. So it was pure pump and dump going on, showing how the bots can pump and down on the market. But these large companies are going to accept the Bitcoin because it is a demand for that. There is a demand. They know that if they open the gates to Bitcoin and to the crypto community, they are going to rush to spend their hard cryptocurrencies on their products and get the revenue out of it. And that's the goal of those companies, isn't it? Right? So these institutions, these big, huge firms and corporate companies, they are only going to accept Bitcoin when there's enough demand on the market, because why would they just open up Bitcoins, Bitcoin payments, when there is nobody wanting them on the bottom market bottoms? People want to access cryptocurrencies and desire and have urgently cryptocurrencies at the very peaks, because that's how the market works. That's how the crowds and herds instincts works. Okay. So most important for you guys to understand is that the moment that these firms accept cryptocurrencies, there is going to be a huge number and amount, like uncountable amounts of people, of herds, of crowds rushing in, okay, through this brand new open door, okay, as the mainstream people, complete mainstream, okay, is going to join in on the FOMO train. They're going to additionally build up the momentum and make the market go up even faster, which would literally cause eventually this blow up. Like, see how it all matches. This is like not just a puzzle that you have to solve. This is a very logical consequence. This is a cause and effect reaction. Okay, so you can really kind of like counter engineer that. I mean, reverse engineer that. So that when the result is that the crowds, that the mainstream joins on the FOMO train, they join because of the big firms being the middlemen, accepting and opening door to those crypto markets, to those people, in front of those people. And they would only do that. The firms would only do that when there is enough demand to purchase their products. Okay, and there is enough demand on the market. Well, only after a certain degree, certain amount of people actually get interested in crypto, right? So the higher we go, the bigger the chances that these firms are going to accept crypto and additionally empower the final leg up of the bull market. But it is also kind of like, very kind of like how to call it, a double-edged sword, because just like I say, the mainstream demand peak happens at the final stage of the bull run. Okay, just as I read here, near the end of the fifth wave of Elliott. And finally, when all the people join in, everybody dreams of Lambos, and they can actually finally get it with crypto, and the market peaks. That's the reasons why institutions are usually wrong about the markets. Okay, because of the demand, the institutions join late on the party, and they are only short-lived, right? Just like Elon Musk, for example, opened up the crypto payments for Tesla. He literally paused it after the Bitcoin started crashing. Okay. Plus, this had other reasons to do with that. But in general, the fact Same things happen with the hedge funds. When there is a hedge fund, they would only, let's say, open a new product and you release a new Bitcoin, just entry for the interested people, okay, to enter with money when there is enough demand, and there is enough demand always in the highest stages of the bull market. So the hedge funds and the institutions are always are also people. They also have the struggles. They also are inefficient when compared with the computers. So what happens is, because the hedge fund managers, just like the other firms, Finnish managers, okay, they are put under the pressure. They are put under the pressure, of realizing some set of producing some set of returns or goals or milestone. And if they don't do that, they are just replaced by another person who does it. Okay, so there is an overall, like, because hedge funds charge you money for actually trading with them, they change you like the fees, the yearly fees. This is the main source of income. Okay, not generating your return. As a matter of fact, if you see most of the hedge funds, then they underperform against the average. They perform worse than the average, and you pay fees on top of that. So instead of investing in funds, in hedge funds, usually you would do so much better if you just realize the buy and hold strategy, buy in an Apple stock just like Warren Buffett did, and held it through the decades, held it through the years, okay, while doing nothing. This is why most of the buy and hold traders overperform the short-term traders, okay, because of emotions. The same hedge fund firm managers have the emotions. They are still people. They can still fuck up. They can still fat finger something, and well, they're going to get literally fired right after. But whatever, the hedge funds underperform. The funds underperform, and so the moment you see all those hedge funds, all those like big firms joining on the FOMO train, realizing and accepting the cryptocurrencies, this is the ultimate signal. And hear me very carefully. This is the ultimate signal that the bull market will end within the couple of following weeks after. Okay, it doesn't take long for the bull market to end. Okay, whenever it goes extremely vertically, like just goes extremely literally up vertical, it doesn't stop, it's not stopping, you don't see corrections, then the bigger the move upwards is, the bigger the chances that this is the very peak. So as I said, you can have the institutional FOMO, okay, you can read it, okay, as the ultimate signal that the bear market is about to start. And guess what you should do? You should take off your money out of this market as soon as possible, gradually or all at once, because you are still going to probably sell somewhere around the top. We have not seen the top yet. The top you're going still you're still to have to see that most likely within December, and the late stage of the quarter four. That's where usually Bitcoin tops historically, and there is a reason for that, of course, right? So, like I said, on top of that, guys, if you go for the NUPL, like, which is my favorite top indicator as well, okay, this is net unrealized profit and loss. So it takes on the on-chain analytics, on-chain data to actually tells you what is the net unrealized profit and loss. So how much profit stays there unrealized, and the higher it goes for the index, of course, the more money stays on the table unrealized, the more profits are being held on exchanges. Okay, and I mean, I should say not on exchanges, but the more profits are held unrealized in general. Okay, so the more profits you leave on the table, the bigger the pool of money just stacks, the bigger the stack of money just there is, and it piles up, the bigger the chances that there is going to be a whale who will come for this money and literally pick it up right in front of you, straight from your nose, straight right, like literally just wipe it out, and you're going to be left with nothing. Okay, when the Bitcoin peak comes, you're going to see most likely $40,000 candles on a day. Okay, I'm not joking. You may be thinking I'm joking, but you're going to come after a couple of months and you're going to see that I was not joking, right? And I simply know I'm right about that. And ultimately, the Bitcoin reversals happened in here, right? Here, some major peaks. Here, some major peaks that happened. Okay. So notice how they always happen when the net unrealized profit and loss just exceeds 0.75 ratio. It happens in its euphoria and final greed stage. So we, so far in this bull market, every bull market so far until now, has seen the price actually the market being so over leveraged, so certain about the market going up infinitely forever that they wouldn't take any wouldn't realize any profits. Every single bull market so far, it's worked this way. There is not a single reason why it would work other way this time. We have not seen this ultimate bull market signal. So whenever you would see those the new all-time highs and all those firms joining on the FOMO train, just like I said, you're going to see net unrealized profit and loss, NUPL, just crossing through the 0.75, and this is going to tell you additionally that the market is getting ready for the final dump. It will take some time. It will take weeks, perhaps even a month. Like, I don't have a crystal ball. I don't know how long it will take, or if it's going to start on Monday or Tuesday or fucking Thursday, whatever. But all I know that whenever Bitcoin comes and breaches through 0.75 ratio, you guys want to stay cautious. You guys want to aggressively scale out of this market. Okay. And like, if you think about it, guys, this is very logical. Okay. But what's logical as well, that you can scroll back through my previous releases, previous webinars, where I was discussing the overall mechanism of how the market rotation within the cryptocurrency industry works, so that you have Bitcoin pumping, and then this entire, just like Bitcoin is the milk, when you spill it over the table, it takes time to spread across the table. And same way, the capital, like this milk, is going to spread across the other instruments on this crypto market, which are the altcoins. And the altcoins are going to have the ultimate alt season. So probably a couple of weeks, couple of days, maybe, that after you see this $40,000 candle drop, whenever Bitcoin just goes over to 120 or even more, $150,000, whatever the target is. Bitcoin likes to surprise us. My personal goal is target is 90, 120. And by the time I will reach there, I will have already taken out 80 or 90% of all my money out of crypto and put in the precious metals, put in the uranium stocks as well, most likely tiny bit, put it in real estate, put into some cash aside, and just living the life, right? And additionally investing in the other businesses. So with all that, okay, the ultimate alt season after the Bitcoin market peaks is going to take place. And if you guys were not there in 2017, then this is the final party. This is like when you guys get over leveraged right now and get wiped out for trying to long the bottom, you're not going to invite it to the best party of all times. That's how it works. You're going to run out of your money. And when everything is going to pump like 10x or 100 fucking x, okay, then I promise you, you're not going to have money for that, right? And you're going to miss out the largest pump season ever, just because you were greedy for trying to buy Bitcoin on leverage, 100x leverage, not at 40,801, but at 40,080, I don't know, whatever, right? Just this one digit doesn't really matter. So I just, guys, want to let you know that the portfolio diversification matters. Okay, the risk management matters. Taking profits matters. And whenever the crowds are always wrong at the extremes. The more extreme they get, the wronger they are. Okay, this is why they call me idiot whenever I call the bottoms. This is why they call me idiot for selling they laugh at me for selling, they call that a depreciating asset, right? For why I was buying the R7 back in April around like $63,000 or something like that. Like, if you open up a chart, and I promise, if you search for my tweet about the R7 purchase and then compare it with the date and time on the price scale of Bitcoin, you're going to see that this was the very peak day. Okay, just do it for your fun. And the more they call me an idiot, the more I know I'm right. That is simple as that. Crowds are always wrong at the extremes. Okay. And okay, let's take two questions, three questions perhaps, everybody, for the Q&A before I close down this session, close this webinar. Guys, if you so far have enjoyed what I was sharing with you, what I'm sharing with you, my experience, my certified knowledge in the technical analysis field, my overall thoughts, like telling you what I expect next to come, my targets, my overall huge warnings, my overall looks for how the bull market will end. Guys, if you are new and if you enjoy that, just smash the likes, hit the subscribe button, turn your notifications on, help us boost and kick off our YouTube profile on the Birb nest, okay, into the to the moon, so that we can produce even more of the more content like that, and hold so many more webinars, and have so much more opportunities to help you guys. Okay, we want to help, and we want to help you per our mission and vision as the Birb nest, and this is me saying, the founder. Okay, to help you become better versions of yourselves as people, as humans, and as traders, to help you reach for financial freedom. Okay, if you appreciate it, if you align, if you want to be part of it, just join our YouTube. Okay, for now, that's all. And let's take the questions. Two questions. How soon you see all-time high on BTC? So as I said, December, most likely. December, okay? When the BTC peaks, we should wait for alts to turn to peak. Wouldn't BTC crash also pull down the markets? Momentarily, it would. Momentarily, of course, it would. But then you would, you would make, just as I said, this. It would take time for this milk to spread across the table. But then when it spreads, the markets pump. Show us your portfolio, okay? So, I used to show off the 6-7 figure positions, but I don't think I'm going to do it anymore, okay? Simply because of the security. I have too much to lose. How is it going to be the biggest bull run if targets just 2-3x? Just, okay. Let me explain you something. If you don't appreciate 2-3x positions and profits, you're not going to make it, I promise you. Okay, the traditional investors make on stocks average returns are about 10 to 15%, and here we're talking about 300% in a matter of 3 weeks, and this is, or 3 months, and this is not enough. This is a lot, guys. This is the greed. Okay, before I guys get you on the giveaway where you're going to be able to win free membership. Okay, we have, of course, like the close group, for my private group where I and my team 24/7, internationally 24/7, literally 365, share all our thoughts on the crypto, on the legacy markets, the daily webinars, the trading therapy sessions with certified and accredited PhD psychologists for the markets, my personal trading journals, okay, with very important market thoughts and charts that you're going to see in public, the market scanners, which work brilliantly and save you so much time by analyzing what is worth looking at and what's not. Okay, this all, guys, you can actually either get for signing up free for 7 days free. You can get all of that 7 days free. Nobody's going to charge you a penny for that. Just put in your email address and name, and you're going to be automatically assigned if you follow the steps carefully. But if you want to save about right now about $130 for the exclusiveness club, and if you want to win that, then I'm going to throw the giveaway right in a second. Okay, and all you had to do is like, comment, subscribe, and turn your notifications on. And guys, if you do it, you stand a chance to win that, and actually not only save $130 in your pocket, but also actually potentially change your life. This is the tools that may literally make things happen. And if you guys are ready for it, then just find a reminder to smash the likes, you hit the subscribe button, and guys, I'm leaving you with these final thoughts, with the final takeaways and the final giveaway. And all I can say is enjoy. Thanks.